Hey everybody. Hope you're all doing good today. So I just want to say thank you again for all the emails. Like I said, I do see them, but I do have a great support team that also helps along and make sure I don't miss anything as well. So keep them coming. If you want to know about the new venture and get priority access, email me at tradingwithjasmine@gmail.com. Support is also in the room answering questions, so ask away. All right, let's get into the markets. All right, so we've had a couple of days of pretty good rallying going on. And you can see that with the big techs lifting stocks overnight, the Nasdaq Composite, Facebook, Microsoft, Qualcomm, all lifting stocks. But now we have hit into our Nasdaq supply zone. Not just the Nasdaq, we've also hit into the Nikkei. Also, what also has affected is the Aussie dollar. They've all hit into some supply at the same time. We also have the Ecb Press Conference coming in at 8:30 a.m. Eastern Standard Time. Already giving part of their what they're doing with their bond buying program, but now she will speak. As far as what I've seen so far from her, is she's been pretty not. She hasn't created too much commotion in the market. Is what it. We used to have Draghi, who you would drop 100, 200 pips immediately, or rise depending if you're at supply or demand. So far with her, it's been pretty quiet. I imagine there's not a whole lot they can say with all this going on. Yesterday we had the FOMC meeting, and you can see too creating just dovish comments in general, which pushing the dollar lower. But besides that, again, not a whole lot that can be said. Stock market is happy because they're all the central banks are willing to continue helping the markets. But Powell did say he can't do it alone, and they do need continued fiscal stimulus to keep the even after all of this. Otherwise we'll see a weak recovery. So, all right, let's take a look at the charts. Let's start with the Nasdaq, since that's where we are hitting first. So you can see up at this 90.92 to 92.51. This rally overnight. Like I said, a lot of these stocks are not too far from their highs even for the year. So a very strong rally coming in, but now we have hit into this area, and you can see that we have started to fall back some from that. But let's take a look now. So what we do have is the demand below. You can see at this area right below this low is 86.21 to 85.72. let's see, 30-minute. And 30-minute you can see is way below at 82.20 to 81.79. But let's go and take a look where all right, so you can see that we have an overnight high coming in at 91.44.75, still creating the overnight low at the 90.38. We did have a initial pullback to, you can see the overall highs that were made, and then we have continued to fall at the moment. So you can see that we did have kind of one pullback overnight, and now you're filling this little, you can see this little where we kind of opened and then pulled back into. So we're filling that area down below right now. We've had one pullback into the overnight so far. Let me just change this. All right. So you can see right here. Yeah. So anytime we're earnings season, it's going to, create this, extra volatility. So of course, if a lot of times if you're in new positions, I mean, you just got to figure, a lot of people, you can't get out always overnight, if you're not in the futures market. So you got to realize those things too, and accept what, you just got to realize your risk coming into certain events like that. It can work very well in your favor, or it can not. And what you have to see is what you have opposing at the moment. So right now the higher time frame is not close by. You have some little bit of lower time frames, but you don't have much in terms of the higher time frame. You can see right here on the 15-minute, we have pulled back into this level. We pulled back into this level, and then down below a little bit lower is where you start to into the 8900s, where you haven't pulled back into. The momentum itself, I mean, Sam has told you many times before that the equity markets are designed to go up over time, and so it's proven to you that any little sign of good, it wants to continue to go. It was taken down initially by all of the coronavirus fears, but now you can see with any sort of little bit of hope, with even the drugs or anything that's coming out, you can see the markets are more than ready to rally. So just keep that in mind, and yeah. But just given where we are, more than likely we'll also develop, you can see, supply zones along with, the opposing demand zones. So therefore, it's going to make it a little bit more difficult where we are to continue to buy. So you would like to buy in one of our previous areas, and then up here be much more careful in this position. All right, so now you can always also wait for new formations to come along, since we did have one pull back into this area, one pull back into this area on the supply side. If you're in from the top, that's great. You don't have a whole lot to worry about. If you're still looking to get in, now you're going to have to continue to wait for new areas to try to develop again. So we'll see as the day goes on. All right, so let's move into, so we'll take a look at the Qs as well. The Qs also coming into its area as well. But let's go take a look on here. I believe I have. So you can see that this was the last area where we just barely touched down into the 203. We've hit up into this 220, 224 zone. So matching up with that Nasdaq, you are going to have this slight little gap. So let me just see where exact price we're at right now. Yeah, so we went up to about 223 and we're sitting at 221. All right, let's go take a look. 221. So we're still inside of the zone. So you're still going to have a gap right around. Let's check out the gap here. So we're at 213. 213. All right, 213 we're at, and then that's 87.50. I just want to see in relation to the Nasdaq where that is. 80. So 87. It's quite a bit lower here. Oh, right where the yesterday low is, I guess, right there. Yeah, so right around in here, that's where we gonna have our gap at. Right, so you can see that we pulled into an area, we've continued to move up, and then now this move is going to be where your gap's going to be. On the 60-minute, you can see we did pull in, so I would watch now too. If we start to drop further, because we can be also developing something. So that's going to be a blue circle. Oops. All right, so watch that for development. And then, like I said, gap is coming in lower down at the 87.50s. All right, so that's on the Nasdaq. Let's go take a look at the S&P. So the S&P is the one that still has a little bit more room to move up to its 60-minute area. So don't forget that area, which is still a little bit higher. You can see that's here up at that 30.17 to 30.49 up to the 30.85. So right now, because the other markets are falling, we're kind of seeing the same thing. So I would do the same thing right now where I would keep an eye out on, so that will be a blue circle too as well. So we're trying to get through some more demand right now. And then you can see too about this area right above, right into about the 2950. So you could keep an eye out on, see if we do actually break the demand. Now let's go take a look at where, if we have a gap on it. So that's 2874. So let's take a look. So right around here is where your gap is. So the area itself, you can see not a great, out of balance of supply and demand, but we did form a couple of 5-minute levels before the breakout. Let me just change this over. Let's just see here. So we did have one touch into the first area, then the gap's going to be coming in somewhere right inside of, let me just change this too. Somewhere right inside of here, that's where your gap's going to be coming in, right? So not your first level, but in one of these lower levels. These are, though, you can see, so the only difference you can see with it is we did, looks like, drop a little bit lower. Kind of looks like to me, after we had the gap, we dropped a little bit lower. So it's telling me the gap is not as significant, just because it looks like we dropped a little bit lower overnight and then started to come back up again. Yeah, so I would say this area is not, the gap is not going to be that great, given that scenario. You can see it's already an area that it's been to a couple of times, and on top of it, we came into it overnight and then came back up. So I would say that area is definitely not fresh. A little bit lower you can see at the 2830 though. Let's see. Let's go to 2830. Ooh, too many. Hang on. All right, so that there. And okay, so 2830 is going to take us into those 5-minute areas that we had that we never went down into. All right, let me just see the 180 demand. Okay, so that's going to take us into here, so make it a little bit easier for you, all of you. All right, so you can see that lower gap area is going to take us into these two levels. So you can see on the 180 chart, we have it at the 2829.75 down to the 2812, and then the 2807 down to the 2782. Okay. Yeah, I mean, you just gotta remember the only thing that I'm seeing this morning is me possibly too much good news, if that makes any sense, knowing that we're at supply. Like it's just a little bit too much enthusiasm. And you can see that's causing us to actually pull back already just because a little bit too exuberant right now. And doesn't mean that, fundamentally it's not going to move up over time, but it's just, given this scenario. So we definitely want to be careful up here. All right. Now let's take a look at the Q. No, not the Qs. The SPY. Okay, so you can see with the SPY, this area here up above, coming in line with that S&P 302 to the 308s. And then down below this 281.50, 276.50. Let's take a look where we're at with that. So we're sitting at 292. Went up to about 296. So we're sitting at 292. So just above this area here. So I believe this will be your first area, the opposing 292. We don't really have a gap down yet. It's pretty close to the 293. All right, so that's on the SPY. The small caps you can see has been a pretty good mover, but it too has started to fall now too, and you can see also has created a bit of a 60-minute overnight area up above. So on the Russell, we do have an overnight. Actually, let me do it here. So you can see you have an overnight. Hasn't also fully taken out demand yet, but doesn't look like very strong demand. So you got 1364, 1354. Okay, so keep that in mind. Right now, your overnight high and yesterday's high are pretty close together. You can see 1370, 1374. Still kind of creating this overnight low at the 1330 right now. Then let's just go take a look at and so this area you can see was tested once, so I believe the lower ones are going to be your fresh areas. So that's going to be 1248.20 to 1238.40 and 1229.50 to 1215.20. 13. Let me go back and take a look at that. Oh, okay, you're saying, all right, I don't see, wait, let me just see. Let me go to 5 minute. Hang on, let me remove this so. I mean, I'm not really seeing anything except that overnight we've fallen from there, right? All we did was create an overnight high after yesterday's high, and we just continued to fall from there. So I'm not seeing anything that's in between of what you're saying. Like I said, it can be a 60-minute area that has created overnight. Okay. Yeah, remember one thing too, right? So if we've gone through, right, if you take a look at this chart and we've gone through certain prices. So if you're looking at a certain price from previous, however, we've gone above and below, and so you gotta consider it all new again, because if the areas were that good, prices wouldn't have taken any of those areas out, right? So if we've reached up into, let me just see. Let's take it back. So, oh, okay, here we go. I mean, that's kind of the area that we're hitting. Uh, we've hit. Right, if you take a look at the overall zone, I believe this is the area you're talking about. Right, so 1, 2, and then there again. Okay. So I didn't take it out yet, but it has been there 3 times at least right now. Okay. All right. Good. You know, I have black charts in general, but I've been trying to switch it over to the white for the presentations. But what I notice is I keep missing things when I do that. So I'm trying to incorporate it so that I don't miss things. So it's not always easy, because sometimes you're looking at so many charts and you're just, you're like, okay, I didn't put that one in. So you can see here on the IWM down below, 121.50, 129. But you know, when you're sitting and looking at it, I think it gives you a better, to me, if I feel like you can see I guess because the green and red candles stand out a little bit more. Although I always remembered in the beginning, Sam always saying to people that, well, if you're really having trouble pulling the trigger, because it doesn't, a lot of people, it doesn't feel right, right? They want confirmation. They want to see green candles if they want to buy. They want to see red candles if they want to sell. And meanwhile, prices, you start to change your mind, right? You start to change your mind. So I remember him just telling the people, well, change the color of the candles. If red and green make you fearful, fearful of pulling the red candles make you fearful of pulling the buy trigger. If the green candles make you fearful of pulling the sell trigger, just change the color of your candles. Now, the only thing is don't mix it up and so you get confused of what it is. But as long as you know what the candles are, and if the color is what's triggering you to, because if you think about it, like people who does, okay, so you can have back testing, you can have sim trading, you can have any of those things, and you're have great results. But then once you're ready to go live, what happens? Right? What happens when you start to go live? It's it's not so much, oh, my results are what the sim trading or the sim trading, yeah, I can do as many contracts or lots that I want, or buy as much stock as I want. You're not always going to get all that. You're not always going to get filled on all of it. And on top of it, right, what about the human part of it? What I've noticed is that people, if it's hitting in the middle of the night, you're not getting it because you don't want to put it out there. So you want to wait till you get up, right? So, of course, there you go. You didn't put it in. So that would have counted as a win. But now all of a sudden it doesn't count as a win, right? Or how about you just spend all this time looking for levels, right? But, today's a perfect example, right? We rallied right into the area, but whoa, the momentum is crazy strong. And you got earnings flying off the table. You got Gilead with the sending out whatever 500, and then Trump wants to put out 1 million by the end of the year of the drug, and it's only in the first phases. And then you have just the central banks coming in and just say, we're going to do whatever is necessary. Let's go. And then you have oil rallying. So who in the world would short up there, right? So you're going to come in and say, I ain't going to short up there. And then before you know it, we just dropped so much even just from the time it hit till now. And it may look like a win on your results, but there's no way you entered. So then that's a problem, right? And then the other part about it is, like a lot of you with the arrivals. And I've gone through that before, where sometimes it matters and sometimes it doesn't. And that's another big part of it. But what about the other part of it, right? What about the other part of it, such as something, could even be something such as, we can't really use it in IWM, but I was just showing you IWM demands. But what about something such as, right, if you have like these you can't really, especially at the, I would say at the, right, if you take a look at something at the bottom here, right, and you're thinking, okay, I've hit into some higher time frame area, I'm going to take it. Let me take it, but it starts to move in your favor. Then you want to move it to break even. Then here we go, and then, or worse yet, I want to not only move it into break even, but I want to move it into break even plus cover my commission, because now, before you were willing to risk however much you're going to risk, but now you don't even want to risk commission money. So now not only you move it into break even, now you want to add a couple of dollars on to cover your commission on top of it. So of course you get nicked out, and then before you know it, this is where the biggest rally comes from, right? So that also affects into your results too, right? So it looks great when you're testing it. It looks awesome, because now all of a sudden you caught this run that went like this. But meanwhile, you weren't in it because you're micromanaging, this whole area down here, right? And it can be a big area, but remember, when you're looking for turns at a higher time frame area, and you're looking for turns, you're going to have a bit of back and forth before you start to get everybody on one side and start to move. But then that's when you start to mess around with all of your stops and all. Yep, the human emotion. Or how about the days that you go, yeah, okay, I'm with the market. I understand completely what the market is doing. So everything is good, life is good. And then all of a sudden you're coming in and you're saying, well, for whatever reason you said, well, this market's gone too high. Let me try to short. Oh, okay, I didn't do too well in the short. So then you take 2 shorts for the day. So really that's telling you, if you took 2 shorts and you're wrong, you're just you're not at anywhere significant, and you're just doing it because the market's rallying. But instead of saying, okay, I'm going to cut my losses here, you go, well, I lost 2 trades, so let me double up so that I can really try to make this up. Then all of a sudden, there you go, right? You could have gotten out of today and still come out with the week just perfectly fine, but instead you just blew your whole week, and you don't even know if you can trade tomorrow because your head is so messed up. Like all these things that, when you're starting to learn about yourself, you don't know until you actually start doing it. And then sometimes you can overcome it. Some people can overcome it very well just to be very mechanical. Leave it in your OCOs, don't touch them. And other people, no. And you can see the majority of people, yeah, they want to see it. They want to, and seeing is not always the best thing. That almost guarantees you're going to mess with your trade because you're standing there watching candle for candle. I know there's people out there going, is she talking to me? Is she looking at me? Is she looking at pushing my buttons? Does she know what I'm doing right now? No, it's because we're all humans and we do the same things. All right. Fear and greed. And then you get the other side of you where some of you are, love to hold out for the big winners, which is great because you'll get the big winners. But at the same time, you're on the other spectrum of things, right? Some of you will be like, oh, I'm going to take my profit right here. Others will be like, wow, it's still running. Why should I get out? Then before you know it starts pulling back and you're like, well, I was just up this much, so I ain't going to get out here because now I lost all that back. I got to wait for it to at least come back, and then keeps dropping back. And then before you know it, your really great win has become a loss all of a sudden. And, that's not good either. So you can see below on the YM, we have, so this area, not your best. It's in a bit of a mix, but it is a fresh area down below, 23,491 to 23,268. And then down below you have your fresher area at 21,877, 21,531. Same thing with YM, is you can watch out for, right? So everybody's kind of forming the same thing on the overnight. A little bit of a 60-minute right up above current price. Okay. So that area you can see is coming in right into that, about that 24,600. Right there. Okay, so let's take a look at the bonds. So the bonds will be our next market to see if we see any other clues there. See, this is when you start to panic, right? This is when you start to go, wait a second. All right, we hit into supply. I didn't get in up here. Oh, but I was sleeping over here. Oh, now this is, oh, well, I can't wait. I can't wait any longer. And, a lot of times that's when it starts to bounce again. But, that's what starts to happen, right? Then you start looking and you start, and then you see more red candle coming. Then you're going, whoa, I can't wait. I really can't wait. But meanwhile, you are fine to wait up here. Yeah, that's life. So we try to make ourselves become as mechanical as possible. That's the only thing we could do. Through time, you just got to be okay with your overall risks. So bonds really, the only thing with bonds is not helping us a whole lot in terms of we just lost a lot of volatility in it. So it's still stuck between these two areas. The one up on top is still coming off of a zone that it's been hitting for quite some time. So I don't consider it as anything really great because you can see it's really off of a oh, now you can't, but it's really off of that whole area up on top. Oh, we got another. Actually, this area is we haven't been to. It doesn't look like. Let me take a look at this one. Actually, this upper one we haven't been to. This one I would keep an eye out on. Bonds overall in general with lower interest rates, that's the issue. So it's holding through all kind of demands right now. But we do have this upper zone that's a little bit higher at 139.11, 139.17. We do also, yeah, all right. I think I was looking at, I do want to see a little bit on the 5-year. The 5-year is much stronger than the 30-year, but does also look like it's, okay, so it actually hit. All right, so never mind. Yeah, all right, never mind on that. I will leave it alone. It is stronger than the 30-year, so let's move to the 30-year. Is the bobble moving? All right, we'll check that out. So you can see the 30-year is weaker in general. It's still holding up into the 4-hour demand, but still far away from this 4-hour supply. So that's the area we've been waiting for, but you can see it's still struggling right through here. So that's interesting to watch too, because you can see if it still has trouble getting through there and starts to break down a little bit further, that can be a sign that's still actually a little bit bullish for equities. But right now we're just camped out right in the middle. The rest of the bonds are strong. But you're saying about the bobble, I didn't take a look at that, so why don't we go take a look at that? Yeah, so you can see we are starting to pick up some steam in this market. So I would imagine the DAX is starting to fall a little bit more as we start to move. Let's take a look what it looks like on the daily. On the daily, it does look like it's trying to break this top about halfway back though to where it was, and you can see that's where we had that last drop, and now we're trying to it did look like you formed some new demand down below, so that's a good thing in terms of trying to move this back up. But let's see now where it would run into. So this next area, wouldn't consider that fresh. I mean, it can hold things for a little bit, but really the fresher area is higher, right? The fresher area is still higher. But yeah, you'll see move just like you see with the DAX. You'll see movement in this pretty fast too. And this is ahead of. Oh, you know why she's speaking? That's why. Yeah. Let's go take a look at the dollar real quick since she's speaking. I'm curious to see what the dollar is doing. Christine Lagarde. Let me see what the dollar is doing while she's talking. Well, so I mean, if you think about it, if you're in a position short, you should have your plan in place, right? Whether you are a person that takes easy money target, which is fine, or you're a person that, okay, once it hits my first opposing target. So this is why I point out the importance of the pure supply and demand, because if you don't know it, you're not going to know where your opposing area is, right? And your opposing area is going to be either your target or where you're going to find time to move your trailing stop, right? Because if new levels form, you move your trailing stop. If you are constantly hitting your targets, perhaps you need to go to a opposing area on a one higher time frame. If you're a person that keeps missing your targets, you perhaps have to move one time frame lower to hit your targets. So all this needs to be in place before you put on your trade. I know in the beginning, a lot of times it's just like, oh, the market's moving. Let me, get in long. Let me get in short. But really, that's the minimal you should do. I mean, I don't believe in the full. You need like 20 steps before you try to put on a trade. I mean, that's ridiculous, because I tell you, if it's anything beyond 2 or 3, the trade is gone without me. I mean, I barely have time to figure out the risks during the day trading, to let alone be worried about anything else. So you might as well forget that. I mean, a little bit longer term, yeah, you can have a little bit more time to assess things, but that's not always good either, because then you overthink things. But the parts that you definitely need is your entry, stop, and target. And if you don't know those, it's because you don't know your supply and demand well enough, because if you know that, you're going to know all parts that you need to know. So that's why I always say it's simple, but you need to master it. And once you master it, then you have all your components. You don't need 10, 20 steps. I mean, it's too much. It's not going to help you. So we can see now the dollar. The dollar is sliding on. You can see dovish comments from Fed Chair Powell. It's pretty much declining for about 4 or 5 consecutive sessions right now already. The only way we can see a possible reversal, I guess, is if, well, she's speaking now, so I'm not sure what she's saying, but if the central banks are wanting to, boost more of the bond buying for the euro. So that's the only thing. Let me see what I got here. Okay. So we're far away from these lower areas of demand, but let's see. I was curious just to look at what I had on the slightly smaller time frame. I mean, it's always with me is you don't want things to just cloud your mind on whether you want to take the trade or not. You want all the components to take your trade, but you don't want things to, I don't know where I put it here, to actually make your mind more fuzzy than it needs to be. That's how I always look at things. All right, I'm not okay, I'm not sure where I put the, but you can see a little bit lower. You do have a 10-minute area. So what I'm saying is, like, it is possible for things to try to flip. It's not gray areas where we're in, because we can go from top of the range to bottom of the range inside of the dollar, inside of the euro. All right, but because we're still in the middle of our 60-minute range here. Right there. So it's not great gray areas where we're at, but what'll happen is, if there's not a whole lot of new things coming along, I mean, the market's pretty much expecting a lot of it, so we could be range bound for a little while. So with that being said, let's go take a look at some of the other markets, and let's move on then. Let's go to crude oil. All right, so crude. So the only thing with crude you got to watch out for is, perhaps with equities, we start to decline a little bit. So we are, you're starting to see the same kind of thing with it. A little bit of an overnight on the 15-minute here. So you are starting to see a little bit. So you can watch out for that overnight that's starting to just, they are going to move somewhat together. Up above, we still have room to move to the closer 4-hour. That's still a little bit higher. And then down below, we did kind of test into this area slightly. So this is the 1350 to 1141. Inside of there, you can see a 60-minute here at 1277 to 1192. So that's inside of that larger area, for those of you that's looking for a little bit of a smaller area there. All right, that's on crude. Let's move to, let's see, nat gas. So nat gas, we also have the report today. So to me, so this is where it's not at also these great areas here. It can very well pop up higher, but you can see right here, we've hit it. It is still struggling, right? It's hit it a few times, though. It has definitely hit it 3 times up at where this gap is. So 1, 2, 3, but it is still struggling. So one last area that I can see at the current moment overnight is up at this 1946, 1983. Just not a great place locationally, because we've been here so many times, but there is an area that did pop up overnight, but then the drop came during the session. Above that, of course, you have the gaps that's going to come in even higher, taking you a little bit further into that overall daily. Yes, I'm going to, yes, I do have copper. Ugh. All right. I don't think we would have made it. Let me see. Yeah, that actually, so I did this very early, but no, I wouldn't have made it anyway. Well, actually, you would have gotten second time entry if I was really quick to get you. Wow. Okay. Okay, I'm not going to take the blame. I'm going to blame you for not bringing it up earlier. No, I'm just kidding. Yeah, sorry about that. That is not. Anyway, this was an area I was looking for because copper had been pretty bullish and finally did show a sign of a little bit of a selling pressure coming in. And it was an overnight area. That's why it's marked in the yellow, but now we have fallen. I mean, you can attempt, but yeah, it's never, yeah, because you can see it, you can try to, try to do it again, but, starting at this 2376, not as great, because you missed the first time. So sorry about that. But good eye on finding the right market, if that helps any. That's any sort of consolation. What we do have, though, above and below current price. So if you are looking now above and below, you do have 24.35 to 24.55, and then 22.89 to 22.70 above and below current price. Well, in terms of how many times it can hit the zone. So, all right, a lot of times when the market, say something such as the stock market, which is designed to go up over time, a lot of times once you see the fierce, that bullishness come in, a lot of times you can only take the supply levels once. That's just the way it's been working, especially during this last administration. But when you start to see turns, though, where you start to see major turns, it usually because you're trying to switch the momentum from the strong to, say for instance, the sell, from the buy to the sell, then what you get is you're going to have close opposing demand zones. So what usually happens is you're going to have to take those opposing demand zones out before you get that bigger fall. So in that situation, what you're going to have is you're going to have the price come into the higher time frame supply level, then come and hit the opposing demand level, and then that's going to go back and forth until you get rid of all those buyers. Then that's when you see the drop, and that's why sometimes you can hit a zone about 4 times before you see the drop, and that happens a lot with the turn of buy signals too, because it's not easy. It usually likes to base out at the bottom, and then you start to have to remove the sellers before more buyers start to step in and starts pushing the market up really high. So in that case too, yeah, we can come in 3 or 4 times, and then not till your 3rd or 4th time be your biggest move, just because you need to remove that. So that's why a lot of times when you're looking for that bigger play and you're moving your entry to break even, once you hit that first opposing area, that's gonna cause you to not be in that big run, right? So you got to think about exactly who you are, right? It's almost like a home run hitter and a base hit hitter. It's very hard, unless you have 2 completely separate accounts, to wrap your brain around both ways, right? Because the guy that's going for the home run is going to give it all his everything to try to hit it out of the park, and the guy who's seeing the base hit is just trying to hit it in places so that he could get on base, right? So it's like two different mindsets. And so it's the same thing with trading. You're trying to go for the big one. If you're just trying to go for that short trade, the first opposing level, you're out, you're done, you made your profit, move on to the next trade. Now you're trying to go for that runner, the one that's, I picked pick the low of the S&P or whatever, and I want this thing to run. Well, if you move it to break even on your first opposing level, most likely you're going to be knocked out and you're not going to be in that. So you have to let it play out. You have to let the trade. I mean, once it moves 3 to 1 or so, then yeah, start moving it up so that you definitely don't want to take a loss, but you definitely want to move it up. That's the difference with that, and that's usually people start to get mixed up, and then the trading gets all messed up, because then their brain starts, because what starts to happen is you start seeing, you're a short-term trader, you start seeing big moves and you're like, I want the big move. Then you're a long-term trader, but you start to get chopped up because it's not running to your targets, and you say, I'm going to go for the smaller moves. So then now your whole trading becomes, completely messed up. So you can see too here, we're not quite up at the upper supply zone. We did hit one supply though. We are, again. What is going on today? All right. I guess it looks like the first one is already gone. So the second one, 760, 750 on the demand side. That's on platinum. Well, I guess the only positive is when you learn how to do this, I mean, you'll be all set up. You don't have to wait for me to do it. This area, so that's still room up on top. This one's already been tested down below, so I was kind of waiting for this area, but that looks like it's not real close at the moment, so we can come back to it on another time on the silver. Let's go see into... I don't believe there's going to be a lot to do in the euro. Yeah. Yeah, the euro too. Only because that dollar has that first, it doesn't look that great here. It looks like it already touched. Spot market looks a little bit better. And sometimes they are slightly different. So, but spot market looks like it has a little bit more, it barely touched too. Can see down below. Yeah, so like I said, not a great place for it. So I wouldn't put in a whole lot here with the euro. If you see some smaller time frame, I wouldn't try to hold out too much for it, just because it's really kind of directionless at the moment, until you start to see some more of that flush out coming. Let's go to the Aussie, because I believe the Aussie. So the Aussie, yeah, so here you go. So this is exactly what I mean, right? So here's the Aussie, okay? The Aussie, you can see benefits from the stock market, benefits from the China had an overall strong data overnight. They are a big part of, China is a big part of Australia's mining and energy expansion. So you can see that prices have moved up into there in a very strong fashion. And now also we have started to fall out of there. So your first opposing zone, that's where you're coming up to right now. So of course, if you're a person that says, I want to take something off because of that, okay, that's fine. You're a person that says, well, I don't want to, but I want to protect some of my stop, but I wouldn't suggest break even, but move it down or so, and then trying to move to one of these lower areas, either the 6,400 or right above this 6,300. Either way, that would be your next move. And I would also look at the equities too. And if you can really have that dollar help, it would help you somewhat as well. But it does look like it's a little bit more in line with equities as well, right? So, yeah. So let me see if I can get some more time in so I can show you. I don't know. Okay, there you go. All right, so you're hitting your very first opposing area right now. So depending on what you want to do with it, if you want to say, I want to move my stop down, so I protect it a little bit. So as you start to move in, then your next area, as you can see, will be right into through there, and then right before. What you always want to do is what you want to do is that you want to you don't want to compete with somebody that might buy, right? So if you're trying to take target, you don't want to be, you don't want to be putting it right here. You don't want to be saying, oh, I want to get target at 62.50. You want to give yourself easy room. You want to give yourself above what they're trying to get in, and this way you're going to get filled on yours before they get filled on theirs. Okay? All right. So we ran a little bit over today, so we'll pick up again next week. But I just wanted to let you know that you can hold on to these as much as if it starts coming into an equity demand, I would definitely also watch out for that too. Because like I said, the Aussie right now, if you take a look at the movement of it, is definitely falling in lines with the equities. So I would use that more of a guide than something else at the moment. Okay. All right, so terrific. Let's, again, if you liked it, hit the like. If you didn't email yet, you can definitely get on the priority list. I do see them all, but I have a great support team that definitely makes sure everything gets done, and I get to see everything. So continue to send things in, and I will see you all next week, and hope you end your trading week great.